Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual guys, this is not financial advice. Please do your own due diligence and research. You see, my subscribers have been asking me to do a video on this company for a while. And I felt it was perfect timing to do the video, seeing that they did their earnings call. And you see, this company, I spoke about them in the past, Sofi Technologies, and I use them for my banking, for my credit card. I use them to buy stocks. They do refinancing, they do student loans, they do mortgages, just to name a few. They own the SoFi Stadium in California. And why do I like them so much? Well, let me say this. The CEO is a genius. And I said it before. They tick all the boxes. It's a great business model. It's a great product, great delivery system, disruptive and innovative, just like Neo. And they had great earnings call yesterday. However, the stock went down because of future guidance. The CEO, and I'll show you guys the clip. So for me, that's a buying opportunity, a temporary setback. Take a look at the clip, guys, and then we shall continue.
Joining us now exclusively is SoFi CEO Anthony Noto. Anthony, welcome back. Good to see you.
Good to see you as well.
So why is the stock down 9% despite a strong increase to guide? What is the street taking from this?
Yeah, I think it's important to focus on the results and what that means for the full year and then what that means for our 3-year outlook. So in the quarter, we achieved 26% year-over-year growth in revenue, $581 million. We had 25% EBITDA margins. We grew that almost 100% at $144 million. More importantly, we have grown tangible book value per share 16% sequentially by about $600 million. We had record deposits of $3 billion and really strong overall performance. The most important thing about those trends that I'd point out, and the reason why 2024 is a transition year, is the growth was driven by low capital, high return businesses, our technology platform business, and our financial services businesses. Those two businesses, when combined, grew 54% year over year against lending that was flat. As we came into 2024, given the uncertainty in rates and the economy, as well as liquidity for the industry, not us, and despite having excess capital, we made the decision to put the resources behind these high return businesses that actually are big enough now to drive our overall growth and profitable enough to do that. And so that's the key message coming out of the quarter, is that transition is taking place and going incredibly well, which sets us up for a great 2024. We actually raised 24 revenue guidance by more than our beat. The comparison to Q2, we'd not provided Q2 guidance before. The street had an estimate there that was above what we guided to, but for the full year, estimates will be going up relative to consensus by more than our beat in Q1.
Okay, so thanks for clarifying all the expectations game. What can you tell us about credit quality right now for borrowers?
Yeah, what we've said is that credit will normalize back to pre-COVID levels, and we're on track to do that. Our life of loan loss targets for our unsecured personal loans are 7 to 8%, and we remain comfortable with those expectations. We are higher in credit than most. We focus on prime credit, and we have very high FICO scores and good cash flow ratios when we underwrite credit. But we've taken a more conservative view on credit, primarily because of the fact that it's not clear where rates will go. At one point last year in October, people were talking about higher for longer. Then by the end of the year, they were talking about 6 rate cuts, and now we're looking at 1 to 2 rate cuts. That type of volatility and uncertainty creates a backdrop that we think allows us to be more conservative in lending and much more aggressive in technology platform in our financial services business. A lot of people don't realize that in our financial services business, we have SoFi Money, SoFi Invest, SoFi Insurance, SoFi Credit Cards, and a few other high margin businesses. And now it's profitable, which allows us to scale that acquisition. And that's what's driving our 44% growth in members to 8.1 million now and almost 12 million products.
Anthony, there's been some dissection of the eco data, the macro data last few days, specifically the saving rate going to the low 3s. And some argue it's a sign of stress, that consumers are sort of living on the edge. Others argue this is all about the boomer generation spending every last penny of their nest egg. Do you have any idea what's going on?
Well, we definitely have a member base that's saving. Our deposits grew a record $3 billion in the quarter. We provide a very attractive interest rate of 4.6% on your savings with direct deposit or with a large recurring deposit on a monthly basis. So we're seeing great trends there. And it's not just the growth in deposits, it's also the growth in spending. We had about $1.8 billion of debit spending on the platform, up from the low $1 billion last quarter. So we're annualizing about $8 billion now. And again, that's on a member base in SoFi Money that's at 3.5 million.
Hi guys, welcome back. So you see, in all companies, new companies, there are certain, sometimes there are glitches, temporary glitches, and you have to decide if it's time to poop your pants and run, or if you love this business model. Now you see, before SoFi, I don't know if you guys remember this, banks, you could put 10 grand in a bank and go back 10 years later and see how much you had, the price, it decreased, and you're like, how is it decreased? It's supposed to be a savings account. They were charging you all types of maintenance fees and stealing your money. And SoFi decided we're going to change this trend. So they started giving you 6% interest on your savings and even interest on your checkings. So you don't lose money because the banks were using your money to lend it out, but yet charging you maintenance fees. This is why a lot of people are still shifting over. And SoFi had a lot of new accounts yet again, and that's a trend that's going to continue. You see, everyone, just like with Yushin, where people buying cars off their phone, just like with people ordering Uber off their phone, ordering food off their phone, why not do all your banking right off your phone as well? So I love this business model, and this is my third largest holding. The only reason why I haven't been adding to it is because of this great buying opportunity with Neo, where I just keep adding for my son now to bring his average down. But don't think I don't still love this company and hold shares in them and average down whenever I can. I hope you guys found this video a little bit uplifting to make sense of what's happening with this company yesterday, to understand that you should not panic, but do your own due diligence and research, guys. I hope you guys found this video to be informational, inspirational, and motivational on a Tuesday morning. If so, guys, don't forget to hit that thumbs up. If you haven't yet subscribed, you might want to think about doing so, because in this channel, we have that warrior mindset like 50 said. We get rich or we die trying, guys.